All right. So we're only going for, I think, around 30 minutes. So we'll go ahead and get started. My name is Kristen Stroud. I'm a tax attorney and CPA, formed my own practice in 2021. And prior to that, I was in Big Four in international tax. And so I focus on digital assets now. I have a couple of larger Oracle clients, some DAOs and startups and miners, and mainly do consulting and planning, but also still some compliance. Um, I have with me Sarah Milby. Sarah is head of policy at the Blockchain Association, which I'm sure many of you are familiar with. She got roped into this through my friend Dan Spooler, who is head of industry affairs at Blockchain Association, and also a co-chair of North Carolina Blockchain Initiative with me. And so Sarah, as I said, is head of policy. She helps develop and implement policy decisions on behalf of the association. And I think the association has maybe over 100 members now. So she joined the association in 2020. Is that right, Sarah? Full time after completing an internship. And I think you earned your bachelor's at University of Chicago. Is that right?
Yep. And I had written my thesis on the regulation of crypto by the SEC. So that's how I got into the space initially.
Gotcha. And I know you had several internships while you were in college in policy and regulatory and government affairs. So you're no stranger to this area. I thought it would be good to have you give us kind of an insider perspective on some of the regulatory updates that have come over the past year or so. Really, I feel like 2022 and 23 were pretty big in the tax and accounting space. So I think most of our audience are, tax and accounting professionals, and so they're likely familiar with a lot of these updates, but it'll be good to get your kind of insider perspective. So speaking of, I know you did a panel at the Blockchain Association Summit in November related to the IRS broker rulemaking. And so last August, as I'm sure most folks know, Treasury issued a notice of proposed rulemaking, which I think we've all affectionately come to deem the proposed broker regs or broker rulemaking. And in that, they really sought to expand their oversight through the definition of broker, among other things. So I was just wondering if you could kind of give us a high level overview and kind of what you see as some of the chief concerns that Web3 companies are facing with that.
Yeah, definitely. And thanks again for having me here. I'm happy to be
Yeah,
here.
thanks for being here.
I think the most important part of the broker rulemaking is looking at it through two different lenses. I think there's the centralized finance, the CFI side, and then the decentralized finance, DeFi side. I think our chief concerns really come in on the DeFi side of things. A lot of the regulations would be infeasible when applied to that part of the ecosystem, particularly because broker status and the reporting that accompanies that status is largely impossible for a smart contract to comply with. There's no way for it to gather information about who is on the other end of a smart contract the wallet address, like what their name, tax identification number, et cetera. It can't collect that information. Additionally, cost of basis is extremely hard to follow in the crypto ecosystem. So if you start at a centralized exchange, go into the world of DeFi, carrying over the price at which you obtained an asset and then dispose of it is incredibly difficult. So I think that's one of the chief concerns as well, is when you kind of go from the centralized part where it's a lot easier to track those types of transactions to the decentralized area, and that kind of going back and forth across the kind of threshold of those two presents its own problems. On the CFI side, I think there's just not enough time to implement this rule, and there's also not a lot of detail given to the entities that would need to comply. And the sheer number of reports that would need to be made and the burden for the individuals is incredibly high, and I don't think the IRS really knows what it's in for either. We've heard that they would receive billions of reports,
Yeah.
and I don't think they have the resources to go through all of them. And additionally, it's like even the assets that are in scope for the reporting, the digital asset definition is incredibly broad and would scope in stablecoins, for instance, which really don't change in price either. So the kind of minuscule transactions that could happen and the sheer volume of the transactions that happen in the crypto ecosystem, I think are incredibly high and would be really hard to comply with. So those are kind of the two lenses that we're looking the rule through.
Yeah, no, that definitely makes sense. I mean, I think even if you were like buying a cup of coffee, I think that's one of the examples that gets cited. You know, you would have to basically report that, and it's just, yeah, not feasible. So have you seen, I know you do have a mix of centralized and decentralized members. Have you seen like a difference in how they're preparing for it, or are they even able to really prepare for it yet?
Yeah, I think the centralized players are considering what information they would need to collect and what systems they would need to build in order to comply. And some of our members already provide tax forms to members or a CSV file for them to help file their taxes.
Right.
But in general, I think it's probably a bit premature for them to invest the resources it would take to build some of these without knowing exactly what it is they're expected to do. So I think there are too many questions that haven't had been answered or clarified yet. So I think they're kind of waiting for more information before they totally dive in on that kind of side of building what would need to be built in terms of infrastructure to do the reporting.
Yeah,
On the
definitely.
decentralized side, I think a lot of entities, well, there's the developers and then there's the software they build.
Right.
There, I think, are some ways in the ecosystem, if hands were forced, that the developers could create new innovative ways to help with tax compliance. But the underlying software that they've already built is in a lot of times can't be changed to comply with this. And so from that sense, I think there are questions about compliance and what exactly would need to be done, or if it's even possible, et cetera. So we're looking at both of those as well.
Yeah, I can say with some of my clients, I see that firsthand because trying to convey to the developers like what we actually really would need. And then, like you said, the existing infrastructure is just isn't set up to like adapt to that right now. Um, so recently, in terms of like overall informational reporting, there was the whole Form 8300, the 10K rule delay. And so do you know what happened with that, or like what's the status there?
Yeah, so the statute, the infrastructure bill that was passed, that updated the 6050I to apply to digital assets required that Treasury and the IRS do a rulemaking to change the form. And the rules and the regulations also have to comply with the Administrative Procedures Act. So there's like a set of kind of requirements that the government has to go through in order to update the form.
Right.
The form hasn't been updated yet, and like Treasury hasn't released any proposal to do that. And they actually just reissued the form in December, as far as I'm aware, and didn't include digital assets in it. Plus DOJ and the IRS TIGTA created statements saying that they weren't enforcing it yet. And the IRS finally said that they're not doing anything until they do the rulemaking. So
Right.
I don't know exactly where the industry got so confused, probably because there was a date when the reporting was supposed to go into effect, but without the form, I don't think that there's going to be any sort of enforcement of that reporting until further notice.
And you're talking about the 1099 DA, right? Or are you talking about reporting under 8300?
Under
Or
8,300.
okay, yeah. And it's funny because I think like understandably a lot of individuals thought that they were freaking out because they thought, oh, like I've got a report right now. You know, I had a transaction over 10K. And um, so yeah, I think it also shows that like the IRS is starting to realize, oh, hey, maybe we really don't have the ability to handle some of these things that Treasury's like asking us to do. Um, so there's also this Form 1099 DA, which I don't think we've actually seen that form yet either, correct?
Yeah, I haven't heard about the status. If I had to guess, it's probably going to come out as part of the broker rulemaking,
Yeah,
but who knows when that's going to be.
right. So The BA I know often does comment letters in response to various proposed regulations. And one thing that kind of in my mind was, I think I said to you earlier, I almost forgot that the Senate Finance Committee solicited input on digital asset taxation, I think like last summer. And then when the proposed broker regs came out, it was like, oh, well, I just almost totally forgot about that. But you guys did a letter in response to Senators Wyden and Crapo, their request, right?
Yeah, exactly. So the senators and their staff essentially put out this letter to the industry asking, and it was a laundry list of different issues they'd seen, or like where there's not a lot of clarity in the tax compliance space as applied to digital assets.
Yep.
And we went in part basically responding to each of those, trying to give advice on how they should take a legislative approach if it was needed, or if there's room for regulators to step in, trying to create some understanding for the staffers there about how to move forward. I think a few of the topics that were most interesting, and one thing that we're really hoping to see, is just a broader tax package put together by Congress. I think there's enough lack of clarity and confusion that it would be really helpful to put together a kind of larger piece of legislation that address many issues. So charitable giving is like a very interesting and like easy one
Yeah.
off the shelf, it seems like, because a
Right.
lot of these assets could be easily evaluated for their value, and therefore like more easy to write off those charitable donations when it's time to file your taxes. Loans, I think, is another kind of similar area where if you're lending, every time an asset is moving, it probably shouldn't be taxed. It should be taxed at the end of the transaction in its entirety, and treated more similarly, I think, to traditional financial assets. And then timing and source, I think, is like another big part of it. I think there's a
Yes.
lot of questions, especially in the staking space, which is growing, particularly as there are more staking as a service providers, like through Coinbase, et cetera, of learning when do we need to calculate the cost basis? When was the initial transaction actually completed? Like,
Yep.
there are just lots of questions, I think, that don't have any answers. So it's hard for individuals to comply with existing tax laws, even if
Right.
they say like it applies to staking. There are lots of questions, I think, that haven't been answered with regards to what that actually means in practice. And I think the last one that is probably would be most helpful is just a de minimis exemption, particularly if the broker reporting rule goes into effect. I think it would be incredibly important to have individuals be able to use their crypto more freely to conduct transactions and purchases, but not have to worry about calculating cost basis on every single asset that they're using every time they use it. So that
Yeah.
was kind of our larger response. And I think there's some hope that Congress could do something at some point, but it's a year of an election and there's a divided Congress right now. So I'm not that hopeful of anything happening soon, but in some down the line, I think there might be space for that.
Yeah. Yeah, definitely. So in a related vein, something else I had almost forgotten about was the SAB 121, the accounting bulletin that came out, I think in 22, where the SEC basically said, and correct me if I'm misstating this, but that crypto companies that were going to hold crypto for on behalf of clients, custody it on behalf of clients, essentially had to hold it as assets on their balance sheet. So there was a lot of pushback about that. And I think the way that the SEC went about it, right, was like, it seemed like it was just backdoor policy making, because it was essentially a rule, but they were putting it forward as guidance, and it didn't go to Congress for congressional review. And so is that accurate? Like my understanding of that, and then also like what's the status? I think something happened recently in the fall with GAO, right?
Yep. So my understanding of SAB 21 is it forces public reporting companies in their financial reports to have any crypto asset on their books as a liability. And for most companies, I think it's hard from a cash management perspective and just the way it could skew the books. But I think it's particularly an issue for banks who have capital requirements. And if you have at what are really just assets in your custody, but then treating them as liabilities, it's more expensive essentially to hold
Oh, yes.
those assets. You have to keep more cash on hand in order to account for them.
Yeah.
So for that, because of that, I think there's been a lot of like people have been upset, the banking trades, and there's been a lot of concern at the member of Congress level as well with the implications of SAB 121. I think in general, people want it to be a safer environment for people to custody crypto assets. And by basically kicking out the banking system as an option because it's too expensive for them to hold crypto assets in large amounts, then you get into this kind of weird customer protection conversation, et cetera. But the GAO essentially ruled that the SAB 121, which was put forward as just guidance, was actually a rule. And for that reason, Senator Lummis and others have proposed to do a Congressional Review Act, which basically means that there's a chance that it could be repealed and just walked back. That has to go all the way to the president's desk. It's like actually passing a law. So the chances are slim, but I think the legality and enforcement of SAB 121 is definitely up in the air in the meantime because it's got this rule status, but was never actually going through the official Administrative Procedures Act.
Right. Like there was no opportunity for stakeholders to give input on it, right? Yeah. I think I was pleasantly surprised to see Wiley Nickel. He's a Democratic congressman from North Carolina, I think joined in that. So I'm always relieved to see bipartisans, this should not really be a partisan issue in my mind. So we've covered a fair amount of like tax and accounting aspects of regulation, but there's some related areas that I think a lot of practitioners would be interested in hearing your take on. The FinCEN special measures regarding CVC mixers, convertible virtual currency. Could you tell us a little bit about that? I think you guys did a comment letter related to that as well.
Yeah, definitely. I think just to be clear from the get-go, we did, I think, criticize some of the proposal, but we support FinCEN's aim to combat illicit finance in our space and think that they're heading in the right direction. We just want to make sure that they don't inadvertently hurt like the developers and the exciting innovation that's happening at the space when they go to implement these special measures. But I think the bottom line is that the proposal's definition of CVC mixing is extremely broad, and the proposal doesn't provide sufficient evidence for backing up such a broad definition. Some things that are included in CVC mixing are pooling funds, splitting funds for transmittal, creating or using single-use wallets, among other things. So it's interesting. I think there are a lot of institutions that do splitting funds or pooling funds, et cetera, just everyday part of business in order to help secure their individuals or customers' assets or to help facilitate transactions in general. So the fact that now those types of activities could be considered mixing and therefore would need reporting, it creates questions of would be self-reporting if you're conducting those activities, or how do you know if an institution abroad that you're connecting with or have a correspondent account with is doing that? But I think also like back to kind of a bigger picture question is, I think there are reasons that individuals choose to use privacy preserving technology, and taking away the option or kind of marking it as default suspicious activity doesn't make that much sense. I mean, FinCEN already has authority to bring in more attention to suspicious activity reports with regards to a certain area, whether that is a mixer or otherwise. So I'm surprised they chose the special measures and the rules under 311 to actually implement this. It kind of gives it more teeth, even if the result is the same as if they just said, hey, banks and other financial institutions, like you just got to keep an eye out for mixers more, which they're already doing because they already have suspicious activity report requirements. So it's kind of a oddity, I think, this proposed rule. I don't know if it'll ever be finalized. It might just been a messaging tool. It's unclear.
What is forgive my ignorance, but I'm not familiar with 311. What is that?
It essentially comes from IEPA, which I'm sorry, I don't know the actual, it's an acronym, IEEPA.
Yeah.
And it gives the president authorities to enforce sanctions essentially. And so when the president actually, and OFAC, therefore, because the president authorizes OFAC and gives delegates authority to OFAC, to enforce sanctions or to actually impose them in the first place, that authority kind of links back to IEPA generally.
Gotcha. Yeah, like with the tornado stuff that happened and then Senator Warren's recent comments, it's just it's really a shame because in my mind there's the blockchain and crypto like are transparent. I mean, they're and so to think that they're only or the primary use cases for illicit finance and things like that. And to your point, there are plenty of people who just don't want their financial transactions broadcast and they're using these in a perfectly legitimate manner for privacy purposes. So yeah, it'll be interesting to see what happens with that. So I think the last big topic or I wanted to cover was related to mining, and I know there was a pretty big uproar earlier in February about the EIA collecting data on commercial miners because of I guess they called it an emergency because of the increase in Bitcoin price. So could you talk a little bit about that?
Yeah, so EIA is a branch under the Department of Energy that essentially collects data on different industries and compiles that information for the government and public to use more broadly. It's not a body that generally produces policy recommendations or proposes regulations. It's really just kind of an information gathering arm of DOE. And essentially, they sent a letter out to 82 mining facilities requesting them to submit every month for 6 months different information about what kind, like who their energy provider is, what kind of hardware they're using to do the mining. A lot of the questions I think could produce like invasive answers in lots of ways, like proprietary information might be kind of gleaned from the answers that would be required. So that is under the 6 month authority. It's like the emergency request only extends for 6 months. And then EIA put out a request for comment on extending that period of reporting to 3 years. That part, I think, is a little bit more up in the air and whether it will happen. I think it probably will, but we're planning on creating a response, essentially looking at whether or not we really believed it was an emergency. And if not, then why single out this industry when there are others, I think, what also put stress on the grid, especially during the winter, et cetera. Trying to push EIA to actually aggregate all the data before they publish it in order to preserve some of the trade secrets of these individuals and miners that could otherwise lose a competitive advantage, et cetera, because they have to do this reporting. And then the last is just to make the report, well, I guess there's two things. Make the reporting a little less frequent because every month is a lot of work. It's a long survey to have to fill out and gather information for. And then the actual questions that are on the survey, I think could better reflect some of the realities of mining, like the question of what the power mix is that goes into the mining process, whether it's green or not, is not something that's addressed at all in the question. So I think expanding the questions to better reflect what's happening and the kind of nuances of mining could be more successful.
Yeah. Let's see, how are we doing on time? So I wanted to give you an opportunity to talk about BA generally if you wanted. And I know you're headed to Denver next week, I guess. I think we may have one question. But before we open it up to questions, do you want to just tell folks like generally about Blockchain Association and your work and what's going on with you guys?
Yeah, definitely. So Blockchain Association, it is a trade association. We're based out of Washington, D.C. We represent a little over 100 member companies who represent big portions of the ecosystem. They have centralized exchanges, decentralized finance developers, self-hosted wallet providers, investment funds, et cetera. I think all people who are interested in the ecosystem. And one thing I think that's unique to our brand is that we have what we call crypto native companies. So all of our companies have the predominant revenue source is crypto. It's not something else. It's not like we represent a big bank that has an interest in crypto. All of our banks are solely crypto focused. So we tend to represent their interests to the federal government. We focus what's happening here in the United States and try to educate lawmakers, policymakers, and regulators about the industry, try to provide clarity. I think when there are a lot of proposals that could cause harm to the space, push back on those, et cetera. So we're doing a lot in a lot of different, it feels like the government's woken up the last 2 years and decided
Right.
to push out something new every week. So it definitely keeps me busy, and it's a fun space to be in because there's not a lot of clarity on a lot of these items. So it's a good time to be creative and try to find new solutions to old problems.
Yeah. I know you guys do like working groups as well, like with the EIA info request. I think you guys did one for minors, right? So, you know, for those on the call who have, like, I have a couple clients who are minors, and may or may not, you know, be a part of the organization, but there's a lot of resources I think you guys provide in your newsletter, and your, you know, you do monthly calls, I think. So there's just a lot that could benefit folks in the space. Are you open to taking a couple questions? I don't mean
Yeah.
to
Yeah,
put you
yeah,
on the
definitely.
spot, but are you able to see you can see the question in
Yes, I
the,
can see the question.
okay.
Emerging trends in Web3 that have the biggest impact on accounting and tax practices. Honestly, I think it will depend on how many users start to adopt the technology. I think adoption has been kind of slow, and I think there are tax aggregators that help individuals file their taxes. And I think the more people who start to use and are engaged with the ecosystem, the more we'll see individuals in that space trying to help people who, when they're filing, figure out what cost basis is, to try to understand different transaction types. Because if you're just moving money from one wallet to another wallet for your safekeeping purposes,
Right,
then that's not really a transaction. But if
right.
you're disposing, like when is it a disposal? When are you actually purchasing a product, et cetera? I think that's one. The other one that's been talked about a lot, and I don't have a lot of expertise in this, but at least on the state level, they're talking about sales tax,
Yes,
particularly on NFTs.
yes.
I'm not quite sure how that will all play out, but if there's another NFT boom like there was with NBA Top Shots, et cetera, like I could definitely see that becoming a more prevalent issue that would need to be tackled. And I don't know if there'd be a federal option or if it'll be kind of a state by state mosaic piece for that. But yeah, it'll be interesting to watch.
Yeah, you know, sales tax is a beast under in like in TradFi and in like just regular industry. And so in the digital asset space, it's going to get super convoluted, I think. But we have one other question in the actual Q&A, and I can read it out if you would like. There are currently 11 crypto ETFs being traded. How do you anticipate these ETFs will impact the US approach to widespread adoption of cryptocurrencies, particularly in the context of tokenization? Yeah, that's a really good question.
The ETFs are interesting. I think they'll be slow to become popular,
Yeah.
but I think as individuals start to meet with their like investment advisors, et cetera, and want to diversify their portfolios, having the ETF as an option to, if you already have a Franklin Templeton account or what have you, the broker that you're using, even Robinhood, then at least you can acquire these like shares of these ETFs to whichever degree you're comfortable with. And I think that exposure and accessibility for everyday Americans will be really helpful, at least especially on the policy side, because a lot of problems we face right now when we go in and talk to policymakers and regulators is, okay, it sounds like you're doing some cool stuff, but why should I care? I feel like no one's actually using it.
Right. Right.
And so we're trying to make sure that that at least Congress and regulators understand the impacts of the decisions they have on everyday Americans and holders. And so the more holders there are, the better off I think we'll be. As for the context of tokenization, I mean, I think there could be a trend towards putting bigger funds onto blockchains. I
Yeah.
think there are significantly lower costs to actually maintaining those funds because of the ledger nature of the technology. So
Yeah.
to the extent that that makes it cheaper for individuals or cheaper for companies to actually create these funds, there might be more options and more competitive interest rates for individuals on certain like indices, et cetera. So that's one way I think it could be affected. I hope that answered the question. But
Yeah, no, I agree with you. And, I think I meet with like RIAs sometimes in the context of planning for clients. And it's amazing to me how many still don't want to even talk about it. I think primarily because they don't understand, crypto and blockchain and the implications. And so to your point about, wider adoption, as investment advisors are educated and learn about this and they realize they can make fees on it, then and it's not going away, then they'll push that out to their clients. So um I think no, I'm not frozen. Well, so thank you so much for the questions. I don't think I see any others, and I know we're probably, yeah, but for those who join later, we're not going to take the whole hour. Sarah graciously took time out of her busy schedule, and she has another engagement at 11 that she's got to get ready for. But Sarah, this was tremendous, and we very much appreciate having your kind of insider perspective on regulation in our space. Thank you so much for joining. And how should people want to? I know you're on Twitter or X.
yeah,
What's the best way
LinkedIn.
to?
LinkedIn is great.
LinkedIn.
Yeah.
Okay.
Honestly,
Um,
I'm better on LinkedIn than I am on Twitter. I get overwhelmed on Twitter. So feel free
yeah.
to connect with me or reach out that way. I'm happy to get in touch.
Yeah. Awesome. And I know the Blockchain Association is fairly active on X. And I think LinkedIn too. I don't know who manages that account, but well, thanks again. We'll give everybody back some time. And Sarah, we really appreciate it.
Yeah. Thank you for having me. It's been great.